everyone, good afternoon. This is Market Fatafat. I'm Avan Dabash. With me is Vinny Motiwala, and it's a healthy market at hand. So we're holding out comfortably in the green for the frontline indices. Support coming in from all the quarters as well. It's the last week of the earnings. The Fed policy announcement is also behind us, and we'll be watching out as well for data points in terms of the macros. Which are some of the smart movers in today's trade? Well, we'll be getting you an extensive list of that. But take a look at Marico. That stock soaring in trade today. You've also got another market mover in the form of Alembic Pharma. 6.5% on that stock as it's nudging that level just about a 595. Electra Green Tech is another buzzer in today's trading session. You've got Macrotech developers. Triveni Turbine as well is up a solid in today's trading session. Something like a Paytm, of course, giving a big thumbs up to the numbers. CSB Bank is a buzz. Tata Motors along with Bajaj Finance. On the losing side, lots of newsmakers. We'll be getting you that, but TCNS Clothing slumps a solid 20% in today's trading session. You've got a Gujarat Ambuja Exports that's under pressure. Bank of India, result reaction. Adani Total, you've also got something like an NCC, Union Bank, as well as Coal India, along with Rail Vikas Nigam, now quoting at a level of about 137. Lots of newsmakers, though, Vinny, today coming up.
Absolutely. On that note, let's get started with all those individual stock movers in trade as well. And we'll be taking you through all the stocks buzzing in trade on the back of news flows, earnings, as well as technicals. On the technicals, we have Sameet Chavan joining with us, while from the research team, today we have Ashesha as well as I believe Vamakshi joining with us. Okay, we have Ashesha as of now as well. But Aman, today there's a twist and you're going to be starting with the first stock instead of me.
Oh, it is. Okay, it is certainly a twist at that, and it's all results that I'll be talking about today. So let's begin then with the first one, which is Gujarat Ambuja Exports. That's come out with its quarterly numbers, and here's what they've delivered. The revenues have come in at about 1429 crores. It's Gujarat Ambuja that I'm talking about, not Ambuja Cements as number one. So revenues at about 1429 crore rupees. This is up a solid 14% from what they delivered last year. You've got the EBITDA performance, though, that's lower by about 50% on year at 107 crores versus 214 crore rupees. Net profits have come in at 69 crores, Gujarat Ambuja, at 69 crores versus 154 crore rupees. And that's a big disappointment from what they delivered last year. So down nearly 60% on a year-on-year basis in terms of those earnings. EBITDA margins as well have contracted, and quite significantly at that, to 7.5% versus about 17.1%. So that's Gujarat Ambuja. Hopefully the stock should come up for you.
Okay, that is Gujarat Ambuja Exports for you. Keep an eye out on the back of its numbers. But let's move on and talk about Electra Green. Ashesha, why have you picked out this one? I believe this one is numbers as well.
It is on the back of its numbers, and the stock is soaring in trade today. As we speak, it is gaining nearly 6.5%. Strong set of numbers have come in. Revenue for the quarter gone by stood at 376 crores, which is an uptick of about 39% on a year-on-year basis. As far as the bottom line is concerned over here, also it's a strong show. EBITDA margins came in at 13.3% versus 11.8% margins that the company reported same time last year, indicating an expansion of nearly 150 basis points on a year-on-year basis. Net profit, meanwhile, stood at 27 crores versus just 18 crores that the company reported same time last year. So the net profit has also risen by about 55% on a year-on-year basis. So strong set of numbers is what the stock is reacting to, and as I mentioned, the stock is gaining over 6% as we speak.
Move right on then and discuss the next stock. Stock number 3, Tatva Chintan, and Harsh, walk us through the details.
Well, yes, the numbers have come in quite poor. While we've seen revenue expand 26% on a year-on-year basis, we're seeing a contraction with regard to EBITDA, and 26% contraction in EBITDA on a year-on-year basis. That's almost a 9.5% decline with regard to your EBITDA margins, which have come down from 22.3% all the way down to 13%. So on the back of that real margin pressure that's coming through, your profit after tax has actually fallen on a year-on-year basis despite revenue actually going up, and you can see the impact of that on the stock price as well. So profit after tax has come down from 18 crore to 17 crore on a year-on-year basis. Of course, there's a dividend of 2 rupees also declared, just to check the box with regard to the news, but otherwise a poor set of earnings, and on the back of that the stock is down.
Absolutely. Let's move on and about another earnings candidate, and that is Marico. Look at the stock. We saw a sharp up move coming in the stock. In terms of numbers, they were an inline set of numbers which came in from the company, but they've given a guidance in terms of the gross margins, where they're expecting a 200 basis point to 250 basis point expansion in terms of gross margins. Also, they're expecting that to turn down in terms of EBITDA margins as well, and we'll see around 100 basis point expansion in terms of EBITDA margins going forward. And that's why we're seeing some of the brokerages, they are maintaining an overweight rating on Marico, given a target price of 582 rupees per share. And let's keep an eye out on that as well. Right now, we're joined by Mr. Saugata Gupta, the Managing Director and CEO at Marico, to talk more about their numbers. Thank you so much, Mr. Gupta, for joining in with us this afternoon. And obviously, the first question that we're going to be asking about is that concerns that we have around rural demand. What is the commentary and demand trend that you're actually seeing in terms of coming in for rural demand? Is this still sluggish? Q4 is a bit sluggish, but Q1, how is that looking like? Any sign of green shoots, recovery there?
If you look at last year, I think there were two factors that drove this softness in rural consumption. Firstly, there was obviously significant food inflation post the Ukraine issue, which led to a lot of input cost increases as well as food costs. And as you know, that whenever there is high food inflation, given that the significant amount of their disposable income goes towards food, people tend to either downgrade or titrate with FMCG. Secondly, I think obviously we had to take, the FMCG sector had to take price increases, which led to downgradation, and sometimes there was some shrinkflation. Now, what we have noticed in categories which are highly penetrated and people buy a definitive outlay, whenever there is shrinkflation, you can't make up the number of transactions that leads to volume loss. Now, if I look at it, some of the change events that have happened in rural is that, number one, I think the food inflation is under control. Some of the input costs have gone down, so therefore we have passed on some of the benefits to consumers. For example, we have done in Parachute, we have taken price drops. And thirdly, I think we are also lapping those bases. Anniversarization of some of it is going to get over this year, because as you know, the Ukraine issue started sometime in Feb, which was last quarter, and therefore, given all these factors, I think the base and all the base, also the softer base, I think the worst as far as rural consumption, this one is over. If you see at Nielsen also quarterly, the declines are, I think, lower. In fact, if you look at HPC categories also, for the first time after a couple of quarters, there is some growth, marginal growth. And therefore, I think the worst is over. The improvement will be gradual, and we need to also wait and see what happens with the monsoon. But I think there will be certainly improvement.
Mr. Gupta, afternoon. So given the kind of price drops, I wanted to understand whether or not there's any impact on your realizations.
The way we see it is obviously, I think if I look at annualized, I don't see any impact. There could be some, deflation built into our revenues in the first half, but the second half, as I said, that most of the pricing interventions happened in the first half, and we started taking price drops in the second half. So I don't see any overall full year any deflationary impact this year.
Right. Now, volume growth is at about 4 to 5% in the last few quarters. When do you think we can see it coming back to high single digits?
Right. All I can say is that for an annualized basis, this year will be better than last year. And we need to see how it pans out after that.
Just talk about that prices correction that we've seen in copra prices. Margins are seeing, a recovery there, good expansion in terms of margins. And you've given a guidance also of expecting a good expansion going forward in FY24 as well. Could you talk about some of the levers that will be supporting margins other than in terms of the price correction in raw material?
Things. One is obviously the input costs, unless there is some other black swan event of volatility, input costs will be significantly better. Number two, I think, as I have indicated, that as we scale up in foods and digital, given the fact that foods has got scale and in digital, the overall environment is soft in terms of marketing spends, this is a great opportunity to focus on the profitability of foods and digital, because as you know that they are now a significant portion of our India business. We have undergone quite a rapid transformation of our portfolio in the last 3 years. And this is the year we are now focusing, while growing the business, can we also make it profitable. We are, as you know, compared to sort of standalone digital businesses, we are a house of brands which offers significant opportunities for synergy, and our burn rate compared to businesses of similar size is far lower. And therefore, I think we know there is a playbook in place to improve both the profitability, and that also will contribute to it. Having said that, even if we get a 200 plus gross margin improvement, as I've indicated, some will get passed on to investing behind the core, because perhaps the core has got a little under investment in the last 3 years as we went about in the transformation, and we will pass on 100 plus bips in terms of margin improvement this year.
And Mr. Gupta, you know, a lot of companies in FMCG side especially have highlighted in terms of downtrading and downgrading. Is that something that the company has seen as well, and in which segments then?
Now we are, as I said, that inflation is under control. We have taken price drops in both Parachute and Saffola, and therefore this entire downtrading has gone out. What has also happened in the value-added hair oil segment, I think there was again unrealistic commoditization, and I'm happy that some of the there has been competitive price increases in line with input cost increases in last year. So that also ensures that the growth in value-added hair oils is much more broad-based, and it leads to a mix improvement and realization improvement, which is also seen if a continuous value share gain in value-added hair oils.
All right, Mr. Gupta, appreciate your time. Thank you so much for taking time out and joining in and giving us a view on the road ahead for Marico. UPL merits a mention, and just pull up the intraday chart. The numbers have come in, and I think on the face of it, it has been a bit of a disappointment given the kind of quarterly earnings that Marico has, that UPL, pardon me, has delivered. So we were working with expectations of a revenue of about 17,000 odd crore rupees, and the company has with a PAT actually of about 792 crores. 1713 was the ET Now poll. Revenues at 16,596 is lower than the street estimates. You've also got the overall EBITDA, which has been a miss. It's down 5% at 2,722 crore rupees. We were working with 3,890 crore rupees, so that's a miss number. And margins as well, 22% roughly is what the street was working with. They've come in with margins much lower at about 16.4%. Remember, Latin America, India was likely to put strong growth, and that was likely to offset the sluggish demand in the United States as well as in Europe. But do remember, in the US, the company has been suffering on account of the price correction that we've seen of one of the key molecules. But looks like even the India business has not managed to live up. And for now, it's been a disappointing set of numbers. The street will also be watching out then for the outlook on their guidance going forward for revenues as well as margins. But do remember, we were expecting EBITDA margin improvement, largely on the back of operating leverage, but that hasn't played out in the quarter. Just a quick look at the stock price, 710 is where it's at, Vinny.
Absolutely, and we did see that fall coming in the stock price post its numbers as well initially. Yes, slight bit of a recovery it's trying to make, but a weakness is what we're seeing in terms of the stock as well. Let's go back to Marico again. And Sameet, what is your view in terms of the charts for Marico? We did speak to the management, fundamentally also brokerages are giving it a thumbs up, but what's your view on the charts?
In last 15 months, this stock has done nothing. In fact, it has been consolidating, a narrow range. But now, recently we saw Nifty FMCG index hitting its new highs. So this stock is now trying to have some catch-up move. Last week, the rally started from the levels of 460. Volume started picking up, and today we are seeing decisive breakout. So stock is now coming out of its long slumber phase. And if we look at the volumes have been sizable today itself. So considering the price and volume activity, we would expect this move to extend a bit. So 545 is the next levels to watch out for. So this is an important swing high. And once this stock surpasses 545, we could see the stock even heading towards its previous highs of 580.85.
All right, watch out for that stock. Marico, an extensive take on the fundamentals as well as the technicals, and of course the management speaking with us. Bank of India then, another set of numbers that did come out, and you have the company is posting a stellar jump in their consolidated net profit, 115% jump in the March quarter this time around, and you had the net profit coming in at 1,350 crore rupees. NII growth as well has been quite healthy for Bank of India, up about 40% at 5,524 crore rupees. The company's asset quality too has improved improved 7.31% versus 7.6% QOQ, with the net NPAs at about 1.6%, absolutely unchanged on a sequential basis. But clearly the stock seems to be reeling under pressure in today's trading session. Remember, they're planning a fundraise as well to the tune of 4,500 crore rupees to help bring down the government's stake in the lender to the 75%. Despite that, and a healthy set of numbers, so the stock is under pressure.
Okay, let's move on and talk about two stocks, that is Aditya Birla Fashions as well as TCNS Clothing. Both these in focus. Why? Because Aditya Birla as well as TCNS have signed a deal where Aditya Birla will actually be buying 51% stake in TCNS Clothing. This is going to be for around 1,650 crore rupees, and it's a combination of an open offer as well as a promoter stake buy as well. Now, post the stake purchase, it will merge with TCNS into Aditya Birla. 11 shares of ABFRL for 6 shares of TCNS is what will be given. The merger ratio seems to be negative for the minority shareholders of TCNS, and that is why we're seeing the sharp fall in TCNS since the get-go as well. Now, for Aditya Birla Fashions, it does turn out to be a bit positive in terms of the transaction is happening at 14 times that's of the FY24 EV to EBITDA versus the successful apparel retailer brands which trade at a valuation in excess of 30 times. Debt should not also increase, so that is a positive there. While for TCNS, it's valued at a discount, minority shareholders would be better off by tendering shares in the open offer, and implied merger value of 393 is at a discount of 7%. So that's even lower than that 52-week low, and that is why we're seeing that TCNS Clothing is actually locked in a lower circuit, Avan.
Yeah, these are two major movers in today's trade, and of course that EG Now news break being confirmed. But let's move right on, discuss charts then of L&T Finance Holdings. Pretty smart move that we've seen in the last month or so, Sameet, from those levels of about 88 to 97. Do you think it can cross 100?
Looks like, in fact, on previous occasions, few months back also, we saw this stock attempting, surpassing 100 mark. But last time it failed. In fact, 2 to 3 times this particular stock failed to surpass 100. But the kind of price action that we are witnessing since last 3 to 4 weeks, stock has been steadily moving higher, after forming its base around 80. And importantly, in last 3 to 4 trading sessions, the volumes have started picking up. So that clearly suggests that there's an inherent strength in this particular counter, and this time, this stock is likely to unfold next leg of the rally beyond 100 mark. So we are quite upbeat on this stock, and as far as short-term idea is concerned, this stock is likely to head towards 104, 108 over the next couple of weeks' time. Any decline from current level would be a good buying opportunity. 92 to 94 should now act as a very strong support though.
Okay, let's move on. And Ashesha, Coal India on the numbers. How is it looking like? You were surely working on a Sunday, but was it worth working in terms of the numbers coming by? Was it a green?
Actually, the numbers were well below what the street was working with, and that was because company has accounted for some wage provisioning impact, and that is the reason EBITDA has missed street estimates. As far as revenues are concerned, they were above what the street was working with, and that was because of strong realizations that have come in from the e-auction premium side. Let's look at the numbers then. Consolidated revenues for the quarter gone by stood at 38,512 crores, which is an uptick of a marginal 9% on a quarter-on-quarter basis and 17% on a year-on-year basis. E-auction volumes were on the lower side. On a year-on-year basis, e-auction volumes declined by about 41%, but higher e-auction realizations made up for the loss in decline in volumes that we saw in the quarter gone by. We have a couple of brokerage notes that have come in. CLSA first up has maintained a buy rating on the stock, and they've given a target price of 280 rupees per share. They say wage provisioning dragged down earnings in the quarter gone by. Fourth quarter adjusted profitability meanwhile was ahead of estimates on account of better realizations this quarter. With higher domestic coal availability and decline in global prices, they expect e-auction realizations to decline in the coming quarters. All in all, weak set of numbers, and that is what the stock is reacting to.
That's one metal stock, but let's move on away from Coal India then to another one, and that is Hindalco. Sameet, let's discuss the charts, because in the last 6 months it's been very range bound. What are you seeing?
Yes, but recently, this stock managed to find its mojo back. Already, it has recovered from the levels of 380, 390. Steadily, it's been moving higher. But now in last, couple of weeks, it has picked up some momentum. Today, we are seeing good traction. The stock has already managed to surpass its important hurdle of 430.35 last week. It consolidated for nearly 3-4 days, and today we are seeing the uptrend getting resumed. So overall speaking, we expect this stock probably heading towards 460, 465. So this is the next cluster to watch out for as far as Hindalco is concerned. And on the lower side now, the previous resistance of 430.35 should act as a very strong support.
Okay, let's move on and talk about Equitas Small Finance Bank. Harsh, why have you picked this one today?
Well, results, Vinny. So we saw a strong set of numbers coming in from Equitas. We saw an NII expand a solid 30% on a year-on-year basis. Even sequentially, when I'm looking at it, 9% growth sequentially, 9.1% number, extremely strong right off the bat there. We're looking at operating profit though, which is coming even better, 36% year-on-year growth in operating profit. Provisions coming in at 126 crore, credit costs largely contained. And we're seeing profit after tax, therefore, which is coming at 190 crore versus that 120 crore same time last year. So we're seeing a solid 34% uptick on a year-on-year basis with regard to PAT. On the business front as well, we're seeing good uptick with regard to both loans as well as deposits. Loan growth was solid 35%, deposit growth also equally matching it, 34% year-on-year. So therefore, no concerns on the growth front. We spoke with the management as well. Quite solid with regard to their credit cost guidance. They've maintained a guidance of around 1.1, 1.2% on the credit cost front, which they've achieved in this year. Around 1.5% was their guidance this year, so they've achieved that, and they believe that that'll hold up in terms of it being below that 1.5% guidance. ROAs, they believe, will hold at 2.2 to 2.3%. So very solid numbers overall, and on the back of that, the stock is buzzing.
Okay, there you have it. Let's move right on then and discuss the charts of Bajaj Finserv. Sameet, would you buy it at the current price?
Yes, in fact, as a disclosure, we have recommended this to our clients through options segment. Stock has been, steadily moving higher after forming a good base around, 1200, 1250. Today, it has managed to traverse its, important hurdle of 89 exponential moving average, which is placed somewhere around 1380. Stock has been maintaining its position, since morning above this important level. And if you look at the volume activity, it has risen substantially in last 3-4 days. So the stock is poised for a good move probably towards its 200-day moving average, which is placed around 1500. So we expect the stock, doing well over the next probably 4 to 5 trading sessions. Any from current level would be a good buying opportunity, and now 1380, 1390 kind of zone should act as a very strong support.
All right, watch out for Bajaj Finserv. 1408 is where the stock is at. Let's shift gears then and focus in on Nitin Spinners. That's another newsmaker, and largely on the back of its quarterly earnings. The company has reported a revenue of 655 crores. That's down nearly 15% on year. Net profits at 39 crores versus 85 crores is a lower by over 50% YOY. Even in terms of the operational performance, it hasn't been great. The EBITDA is at 71 crores, down nearly 60%, with margins contracting to 10.8% versus 21.8%. Clearly, the stock is feeling the heat on the back of those earnings and is lower in trade.
Sameet, NOSIL on the charts. How is this one looking like? Seems like in the last 6 months, we've seen a slight bit of a consolidation correction there. And now, again, in the last 1 month, slight, again, uptick. You're seeing 12% return in the last 1 month. Is this just the beginning of a good run-up that we could expect in NOSIL?
Yes, certainly looks like, stock, seems to have cemented its position around 200, 210. In last, 5 to 6 trading sessions, the momentum has picked up substantially. The volumes, if you look at the volumes, it has risen. The current volumes that we can see in last couple of days, it's more than average of its previous trading session. So we expect this stock heading towards 250. And as a disclosure, we have recommended this to our clients as well. So any decline from current level, so 230, 225 should cushion any kind of decline, and 222 can be kept as a stop loss for a target of 250.
Okay, let's move on and talk about Paytm then. And they did report their numbers, but we have a brokerage note that has come in from CLSA where they're maintaining a buy on Paytm and hiked the target price for Paytm to 850 rupees per share from previously 750 rupees per share. Furthermore, what they are highlighting for Paytm CLSA is that the improving EBITDA and the US dollar $1 billion cash on the balance sheet is something that is keeping them positive. The take rate in payments improving from retail income, and lending distribution disbursement trends are quite strong for Paytm, as well as they expect the cash burn to end in a few quarters. So revenue in line, losses were better than expected. Overall, it was a good set of numbers that came in from Paytm, and a buyback was also completed in this quarter. So key triggers, key positives coming in for Paytm post its numbers as well. CLSA also giving it a thumbs up.
And so is the street. So the stock is up a solid 5% in trade. Not more newsmakers then, and Alembic Pharma as well. Shesha, that's in the spotlight.
This is yet again on the back of its results, and the stock is soaring in trade today, 6.5% higher as we speak, 5% higher as we speak. And this is on the back of strong set of numbers. Revenue from operations have largely been flat this quarter on a year-on-year basis, but margins have expanded a whole lot. Margins have come in at 15.1% this quarter versus 11.3% that the company reported same time last year, which means margins have expanded by nearly 400 basis points on a year-on-year basis. Profit, meanwhile, has jumped. It has come in at 152 crores versus just 22 crores of profit that the company reported same time last year. So strong set of numbers is why the stock is gaining in trade today. As I mentioned, 5% higher in trade as we speak for Alembic Pharma.
All right, that stock at the highest point of the trading day, clearly reacting to its numbers. Moving on then, DLF, Sameet on the charts. Let's discuss why you like that stock.
See, undoubtedly, this stock has already given a stellar move, nearly 40-odd% move in last 1 month or so. It is now challenging its multi-year highs of 450. So the kind of price and volume activity that we have already seen in last month and a half, the stock is clearly poised for surpassing its multi-year highs of 450. So this leg of the rally is likely to extend from here on. 465, 470, these are the next projected level as far as the DLF is concerned. And on the low side now, if you see, there's a cluster of support in the zone of 420 and 405. So we expect this stock doing well, and it has already been doing well. So it will continue to do well, and 465, 475, these are the next levels to watch out.
Harsh, DCB Bank, how are the numbers like?
Well, it's a very solid set overall, Vinny. So what we're seeing is net interest income continues to expand, NIMs continue to expand as well, and very impressively in a tough interest rate environment. So we've seen NII grow by 38% year on year. In fact, NIMs also expanded by around 16 bips, 0.16% to 4.18%. We did speak with the management, and just to add that one piece, they believe that NIMs will come off from those highs, and the more normalized NIMs will be between the 3.65 to 3.75% mark. So we will expect that impact to come through in FY24 is the expectation. Quickly moving on though, OPEX also stayed elevated, 33% higher. They've added 33% more or 30% more employees to their base, and operating profit therefore has jumped just 10% year on year. Provisions are also have come in largely stable. 50 crore is where the provisions number was at, and PAT has gone up by 25% year on year to the 142 crore mark. ROAs have come in at 1.1%. Mind you, the normalized guidance is 1% for DCB Bank, so I expect that as well. Advances and deposits, again a fair match, just like Equitas, a solid set from both sides, 18% growth on both sides of the balance sheet. So overall a strong set, and on the back of that you can see the movement on the stock as well.
All right, watch out for DCB Bank, clearly giving a thumbs up to its numbers. Moving right on then, as we take a quick break, ahead of the Karnataka Assembly elections, rallies are being held in Karnataka and heavyweights are doing roadshows in the state. The Chief Minister, Baswaraj Bommai, held a public meeting in Vanhali.